Guys, in this video I want to talk about tape reading. It's the same that I do in Spanish, but in this case I want to do it in English for the traders that watch my videos in English, okay, and doesn't understand Spanish. So I want to talk about the basics of tape reading. I want to talk about the theory of supply and demand and all of the financial markets, and also I want to talk about market depth, better known as level 2, and the time and sales, really important. Also AK the tape. Okay, so I hope you like this this presentation. My English is worst in when I write, but I hope you like it and you understand everything. So let's go with the first history of the tape reading. Okay, guys. As you can see on the images, these guys was traders, and on the early 20s, 30s, 40s, they trade like this. As you can see, they have a machine that prints in a really small tape all the trades that was executed at that time. Obviously, in that time, they had delayed data. Okay, so they speculate with that price. Right now the tape reading is really different. Why? Because the high frequency trading is the biggest catalyzer of volume in any stock, any commodity, any future, any market. Okay, the high frequency trading became really difficult because, as you may know, is like machines. Okay, they execute it with different types of orders that are really complicated, and only a machine can do it. So all the markets have that, and the tape is real different. In that time, you will see that the sharks trading big orders in in the small market of Mexico, for example, of Colombia, of any market smaller than the US market or the London market, you will see this type of behavior: big buys, big sells in a specific price. But right now, the US market, the New York market, the NICE and the Nasdaq, they are contaminated with a lot of orders of this kind of robots. Okay, so it's complicated to watch these things. So let's go to the next slide. And this is really important, and I want to make you understand a really important question that everybody has. Okay, and how the price move in any direction. Okay, how the price moves up, how the price moves down. And it's totally false that the price moves up because there are more buyers than sellers, and the price moves down because there are more sellers than buyers. Okay, that's totally false, and let's understand that. As you can see on the chart below, this happens in any physical market. When you go to a market and do you want to buy bananas or apples, this works, okay, because there are supply and demand, maybe. Okay, so the financial markets moves different. Okay, so for that issue, I want to show you first the type of orders that we have on any financial market. Okay, knowing that, you will understand the basic of the tape reading. Okay, it's really important to know how works the price action, how the market orders and limit orders work in any stock in any equity. Okay, so let's move up. Okay guys, to understand what I explained before, we need to know which type of order exists in any market. Okay, and there are two really important, and with almost all the broker service around the US stock market, we have these two types of orders. Okay, the first one, and most aggressive, is the market order. Okay, and it means that you don't mind the price execution. Only one is buy or sell. We don't care about which price the stock, well, our position execute. Okay, so we only care about go in or out in a position. It depends if you are long or short, but it doesn't matter the price. The broker will execute your position and at any price, okay, but in that exact time. So let's put an example, a quick example. A buy order of a market for 100 shares of Netflix means imagine if you have the broker in front of you and you want to tell this: okay, broker, buy me 100 shares of Netflix at any price you can get. I don't care which price, but you get me, you buy me 100 shares, okay? So we indicate our intention to buy or sell X amount of shares of any stock at any price. Okay, so let's put a quick example right here on the, for example, this one. This is Tops, the most active stock today. So let's see that I want to buy right now 100 shares of this one. Okay, so right now I want to get in. So if we watch right here the bid and ask, this stock, if you put a market order in that exact time that you press the button right here, is going to buy you in this, between these two prices. Okay, it doesn't matter, but you will get in right now maybe at 6.98 or 99. Okay, and it's going to print in the time and sales. Okay, that's really important. So let's go back with the presentation. And I don't recommend to use market orders, but it's really important to understand how they work. So the next type of order is the limit one. Okay, this is the most used by any day trader, swing trader. Everybody uses a limit order. Okay, the limit order are specific as we indicate our intention to buy and sell X amount of shares with the maximum and minimum price that we are willing to accept. Okay, so let me put in an example of a buy order, and let me put it in that chart. And okay, so let's say that I want to buy TOPS at a max price. Okay, the max maximum tolerance that I have in this position, because I don't want to chase it, is, let's say 750. Okay, so you will put on your trading box, it depends on any broker, you will put 7.15. okay, so if I click buy, your position is going to execute at a maximum price of 715, okay, but is the maximum price. So if I click right now buy, it's going to execute me at any price below. Okay, but if the price moves quick and the price action goes higher, goes above the 7.15, is not going to execute your order, only if the price go back down. Okay, so it's better, because on the market orders you have the risk that the price goes really quick to maybe 7.20 and is going to execute your order right there, so you have a bad average price. So the limit order is better, is more
how do you say, it's like more exact in order to have a better price, average price, okay, and don't chase a stock. So that's what I recommend for an entry, the limit order. And let's say that you want to go short, okay. I want to go short at 6.79, okay, right here at this price, and is the max amount of price, the max level, the lowest level that I want to short this thing. If the price go below that area, the limit order is not going to execute, okay. That's really important. So it's great for took some position, because if you are short and you want to put your target, your profit target at 6.60, for example, the price, only if the price go back down, is going to cover your position, because it's a buy order. And as I said before, it's the maximum price that you are willing to accept. So let's go back to the slide, and okay, let me read this example really quick. So for example, a limit order to buy at 30.80 for 100 shares of General Motors would be like telling our broker, imagine that the broker is in front of you, buy me 100 shares of General Motors, but you may know that the maximum price that I accept for these shares is $30.80, not a penny anymore, not a penny more, sorry. So yeah, I think you understand that. And for example, a limit order of sale, if you are long on the first part, if you are long and you want to take your shares, it's a really nice advantage, because you indicate a minimum price to sell that amount of shares that you buy on the first place. So a limit order to sell 100 shares at $60 of potash would mean sell me 100 shares of potash, but you know that the minimum price that I accept for these shares is $16. So I think we are clear on this, and it's really important on the tape reading to understand the types of orders, these two types. So let's go to the next slide. Okay, so I will give you the answer to the question before. How the price moves up or down, and if for any buy order there are a sell order, I mean talking in a liquid stock, in a liquid equity, why the price never stay in the same level? Well, that's because the price moves when the limit orders in some specific price are absorbed by the market orders. Once all the limit orders in that specific level of price get absorbed, the price moves in that direction. Okay? So as you can see right here, this is a quick image to what is going on when you put an order and it's executed. Okay, so if you buy at market, sorry for the I write this wrong. So if you execute a buy order at market, it's going to execute in the sell limit order or ask that is the lowest price of offer. Okay, and if you execute a sell market order, if you want to go out of your position, maybe of your long position at market, is going to execute on the buy limit order on the bid, the inside bid. Okay, is going the demand is bid, the offer is ask. Okay, always. So this is really important in tape reading, because they are the principal elements of the market depth. So as you can see, it's like a cross execution, and that's really important. You will see why. So let's go to the level 2, and I will explain really nice this important tool. So the market depth, also known as level, it's a really important tool into the tape reading. So let me explain first the level 1. What is the level 1? Is the superficial information of the stock. So in this case, as you can see, we have the ticker BRX. Okay, so this is the level 2. These numbers that you can see right here. So as you can see, we have the last price, we have the high and the low of the day. We're talking in intraday data. We have the percentage movement, the net movement in cents or dollars, the volume that the stock have in that day, and that's it. Okay, that's the level 1. And this information you will you can have it in almost all free websites, like free stock charts and that kind of free websites that have information about stocks. They have this data, only this data. But what is the level 2? Is the market depth, as the name said. Okay, so the level 2 is all the active limit orders, okay, that the stock have in that exact time. So as you can see, we have a lot of colors, a lot of numbers, but if I explain you will see that it's really easy to understand. So as this explanation said, active limit orders. Okay, so as you can see, and as I said before, remember the bid right here is the demand. The bid is the demand, and you will see the bid always on the left side of the level 2. And on the right side, you will see the offer. As you can see, all the limit orders to sell and the limit orders to buy right here at the bid. Okay, so as you can see, each color is a different price. Okay, and as you can see, this arrow is telling us that the offer is ascending. Each level, each color is going up. As you can see, we have right here 83, 86.11, 86.20, 86.23. So always is going to be ascending the price, getting close to that last price that you will see on the level 1. So the bid, the inside bid is this price. The price of at limit that are higher, okay? The higher demand. This is the price closer to the last price, okay? And right here on this second column, we have a different order. As you can see, right here on the last price is the higher price, okay? That the people, that the traders want to offer these shares, okay? They want to sell or they want to short, it doesn't matter. So as you can see, each color is a different price, and when as you can see, the arrow is telling you that the inside ask is the lowest price that the people want to offer. Okay, so these two prices are really important in the tape reading. Okay, so as you can see right here, we have the price on the column that said bid, and ask is the price. The size is the volume, and this is not one share, this is 100 shares. Okay, less numbers, clean information. Okay, right here we have the market makers, or the ECNs, I think in English, and these are the services that your broker give to put your order and put it into the market, into the stock exchange. Okay, I'm sorry if I can explain in English this to make really understandable, but I'm sorry, it's my second language. So I think we understand right now the level 2. And also I want to explain what is the spread bid-ask. The bid-ask spread. The spread is the difference between the higher price of demand and the lowest price of offer. As you can see in this stock, we have 5 cents of difference, and that 5 cents we consider the spread. When a stock is not so much liquid, or when the stock doesn't have a lot of shares into the public, is going to be like this. So I will explain you that better in this slide. This is liquidity, and let me explain what a high liquid stock have in the level 2. As you can see, this is Group Hub, and it's a really liquid stock. 9 million, almost 10 million that day. A lot of people are watching this. So as you can see, every single level on the level 2, every single price level is really close to the other one. As you can see, we have 0.41, 0.43, 0.44, almost is consecutive. So a lot of people want to trade this stock in each single level of price. There are a lot of interest, a lot of people that want to buy or sell this stock. That's liquidity, and you can see from the level 2. Okay, low liquid stock in the other side is when you have something like this. As you can see, we have different prices at different, really different pennies. Okay, as you can see, from 46 to 46.12, you have 12 cents of difference, and that's a huge. When you have on a liquid stock on 1 or 2 cents, I mean, you understand that. And as you can see, also it's really risky to trade these kind of shares. As you can see, the volume is almost 200, and this picture is at the same time in the 2 stocks. Okay, so this is really low volume, and as you can see, the difference, the spread between bid and ask is 10 cents. So this is really dangerous, because if you buy the same amount of shares in this one or in this one, you will start losing a lot. You will need a movement of 30, maybe you are long, you will need a movement of 10 cents to be at break even on this stock. For example, trading CFDs in my case. So you can see the difference between a low liquid stock and a high liquid stock, the interest in each level of price. Another important thing to watch, and the level 2, the market depth gives you, is the float. The float is the amount of shares that you can trade, that the public can trade. Okay, so a high float stock, high shares in circulations, is a big blue chip. Like this example is General Electric, and as you can see, this stock trade a lot of volume. And look at level 2. The level 2 is telling you that in each level of price, and as you can see, it's only 1 penny of difference, is a super liquid stock. The size is huge size. Okay, bigger size, and I mean, you can see the depth of market in these stocks is really complicated. So I never recommend to day trade this kind of stocks, the high float stocks. In the other side, we have the low float stocks, and as you can see, we have these low price stocks below $10 with 2 million shares and up 167%. This is a huge. And in the other hand, General Electric is only moving 0.45%, okay, with a lot of volume. So this is the difference. These stocks have low float, low amount of shares that the public can trade, that the public can buy or sell. And they are risky, really risky, and it's complicated to trade, because sometimes the level 2 and you will see why it's really complicated to read these two types of stocks. So we want to look for stocks that have normal float, maybe low float, but a lot of interest on the public. So in this case, Delta Technology Holding have really low float. As you can see, we have only 1, 2, 3, 5, 6 levels of price that the people are interested in on the buy side, on the demand. And on the offer, we have the same exact level of price that the people are interested. Okay, as you can see on General Electric, we have more and more, and only my server only gave me 10 levels of market depth, but in this case we don't have even 10, we have only 5 on each size. So as you can see, the difference between each level is huge, 8 cents and 7 cents, and that's a lot in a low price stock, a lot of percentage. Okay, so you need to understand that a low float stock, it's risky, it's a lot of risk, and a high float stock is not risky, is in the other side, is really slow price action. I mean, you need a lot of orders to buy this, all of this. Okay, so you understand the level 2, and let's go to the tape, the time and sales. Okay, this is really important, and I hope you understand the level 2 because this is related to that. So as you can see, we have 3 colors on the time and sales. And what is the time and sales in the first place? It's the list of trades that are printing in streaming. Okay, the list of trades that are executing in which price, with the volume and the exact time of that execution. Okay, so as you can see right here on the top, we have the last order that is executed. So this one is the last price. This is the last price of the stock. Okay, so as you can see, the time is telling you that if the price is above, is like before. So the last price is always right here, and is going to be like this. As you can see on this arrow, the print is going down, because always is going to be a new order executed. Okay, so as you can see, let's go back right here. As you can see right here, it is telling you that always you need a market order and a limit order to execute some specific trade. Okay, so in other words, right here on their time and sales is telling you that are only executions. So this is market orders absorbing limit orders. Okay, so let's go with the colors. As you can see, we have 3 colors, and let's start with a white one. Okay, these orders that was executed between the inside ask and the inside bid with an special ECN. Okay, so if we see for example, this level 2 in DELT, that white orders are executed between the inside bid, this yellow level, and this yellow level inside ask, between these 2 prices into the spread. Okay, with a special ECN. Okay, so these type of execution orders are the less important because they don't move the stock. The one that moves is these 2, the green and the red prints. So what is a red print? It's telling you that a sell market order is executed at the high price of demand or the inside bid. So every time that you see a red print in the time and sales, is executed at the high price of demand. At this level, a red print is absorbing. Every time we see one like this, for example, one is 100 shares, okay, it's the same as the level 2. So if you execute one, if you see some red print of 100 shares on the tape, it's absorbing one of these, okay. So in this case, the size after that is going to be 9, okay. So it's absorbing all the demand. And if we have on the print a lot of red in that exact price, you will see a move of the last price going down. So it's going to move in this direction, it's going to absorb in this direction, okay. And a lot of demand is going back on the price. So the green levels are buy market orders executed at the lowest price of offer, the inside ask, okay. So if you see prints in green on the time and sales, they are telling you that the price, like in this case the inside ask, is absorbing. So if we see 4 prints maybe of 100 shares on green, is telling you, and on the 2.85 is telling you that these are getting absorbed. So the price, the last price, is going back up, is moving up. So the price, the chart, the price action is going to move higher, okay. So that's why these two tools in the same, if you see the same price action, they are really awesome, okay. So this is another tool, and is the same that the level 2 is all the limit orders with the price and the last price, okay. So this is used in the future market more than the stock market, and it's called depth of market, the DOM, okay. So it's really similar to level 2 but with more structure, and maybe you understand better this tool. This is all the limit orders, this is all the bidders, okay, the bidders, what we see on the level 2, this is, and as you can see, this is the last price on yellow. So it is telling you that this is the inside bid, is the higher price of demand, okay. And right here, as you can see, is the ask levels, and this is the inside ask, and as you can see, higher prices, and every single level. So if we go back to the level 2, and let me show you, okay, in this example, as you can see, the ask is in order in the other direction than the DOM. As you can see, in this case is ascending prices, as you can see, but is the same structure, okay. In this case, it's telling you in the other direction, okay. The price is right here, and higher prices, and we have right here each level. So you maybe understand better the DOM than the level 2, and watching this is maybe complicated for you, but I recommend to use, almost all software of trading is like this with the level 2 and not the DOM, okay. So you need to understand better. The level 2 is the same, as you can see. So let's see an example in a real time, okay. So for example, right here we have KERX, and a really liquid stock today is a low float stock, okay, a low float. Let me show you why. If we go to the daily, look at the freaking volume, it's really high, and normal the average volume is lower than 200 shares, so this is huge. So let's see, and that's why it's really important to have the 3 tools: the chart for the chart patterns, the price action, and the past data, the history of the stock, and the time and sales is what is happening right now, and the level 2 is what everybody wants to trade in that specific time. So as you can see, we have a lot of offers. this is telling you that there are more people that want to sell the stock. Okay, so we have a huge buyer right there, and that's why this is support. And as you can see, we have the next level with almost nothing. But maybe if we see prints in red, this is super bearish. If we see prints in green and we see less levels on the 4.93, is telling you that this is oversold and maybe is going to make a pullback. So let's watch just for a couple of seconds if we can see some injection in the volume. If you don't have volume, like right now, it's telling you that you don't have prints on the tape. So what you see in the chart is what all this price action on the tape is doing. So, but with a different interpretation. So as you can see, we absorbed the 492 with these orders. These red orders are absorbing these bidders. Okay, so if you see this kind of price action, these red prints orders is telling you that are absorbing all these bidders. Okay, so right now this is looking bearish, actually pretty bearish, and as you can see we are at 4.81. Let's see if we can absorb that level. If we have enough amount of red prints, this thing like right now, this thing is going lower. So that's how the price moves, and that's our philosophy when we do tape reading. The market orders absorbing limit orders. So these are market orders of sell absorbing limit orders of buy. Okay, so that's pretty much the thing. That's how you need to read these two tools in look at this. We move down, and that's how the price moves. That's the whole point. So as you can see on my YouTube channel, you will see some trades that I explain what I like it, only watching the level 2 and time and sales. Most of them are in Spanish, unfortunately, but maybe you can see the price action and you will understand where I buy and where I sell. So this is a guide of tape reading. Is all that you need. I mean, look at this, we find support. It's all that you need to understand the tape reading, understand each tool, how they work in as a team. Okay, so right now if you can see, look at this, we are printing, we move back up and we absorb all the 92 at the ask. That's why we are printing now green on the 4.93. So the anatomy to use these three tools is using the chart for these patterns. First look the chart for the pattern, then look the level 2. For example, right now I don't want to buy this thing because we have a huge level of resistance at 4.93, as you can see right now, and that's why that hammer didn't work, because you see the buyers and sellers right here. And on the time and sales, you are looking that if that information on the level 2 is executed at which direction. Okay, so I hope my presentation was clear for you. My English is not the better. I don't have a big vocabulary, so I hope you understand that. And if you have some questions about this, you can send me an email at let me see right here, Antonio trmx yahoo.com. And that's it for me in this presentation. I hope you like it. See you next time.